Okay, looks like we're live here. Y'all want to kick it off over there?
Alrighty. Thank you, Geneva. Hi, everyone. My name is Nick Young with Latino Tax Professionals Association, and we're honored to be hosting and working with ZenWork to present you the following presentation. Now, ZenWork provides e-filing and tax compliance solutions for the smallest mom and pop shop, for one-woman accounting firms, for small, medium businesses, all the way to accounts payable departments and the largest accounting firms in the country. Tax 1099 is just one tool under ZenWorks' umbrella of compliance and regulatory reporting platforms. Compliance and reporting requirements are constantly changing. Combine this with rapidly evolving digital data security, and you have a massive filing problem that most filers aren't able to solve on their own. That's where ZenWorks steps in. With over 10 years of experience in the e-filing industry, ZenWorks provides the best of technology and the best of customer support. So here I present to you, Geneva, take it away.
Yeah, thanks so much, Nikki, for that intro. And we're really happy over here at ZenWork to be working with you. I am your moderator. My name is Geneva Brock, and I'm the marketing projects lead here at ZenWork. And I've been here for just a little under 2 years now, and my main role is providing compliance content to all of our users. And I'm excited to talk with the members of the Latino Tax Pro Association today and share some of that information as well. Also on this session with me is Ed Pratt, and he is our host for this event. He is our Chief Operating Officer here at ZenWork, and he's been here for over 5 years and has almost 20 years of experience in compliance under his belt. And so he's a very knowledgeable, experienced guide, and he has a lot of great information to share. Before we get into the session, though, I just want to share a little bit of information on CPE credit.
Hey everybody, looks like we lost Geneva there for a moment. Looks like she's on her way back in, so let's give her just a second to get the session going here again. Geneva, can you hear us?
Hi, yeah, sorry about that. Didn't know what happened there. I'm not sure where I cut out, but I think I was talking about information for our CPE credit. So if you're looking for that CPE, you're going to want to stay on the webinar for the duration of this entire session. And if you have any technical issues, we won't be able to offer you that credit, so make sure that you stay on the session. Candidates are also required to answer all 4 of our poll questions, and those will be distributed throughout the session, and those will appear on your screen, and you'll be able to send your vote in, and we'll keep track of things that way, so make sure you're answering all of those. And then in the follow-up email to this session, we're going to send out some information on how to get your certificate. You'll send us in a request for that, and we will check that you meet the requirements. A couple of housekeeping issues here. If you have any questions, feel free to use that webinar chat box, and I see that a couple of you have already found those. So make sure that you're asking any questions that come up throughout the session, and we'll answer those as we can, and we'll also have a question and answer portion at the end of this webinar. We're also going to send out some notes in the follow-up to this session in an email, and you'll get the recording of this demo, you'll get PDFs of the slides, they'll be in a printable format, so those will be easy to send out to your office, other members of your team, anyone that you think would be helped by this 1099 information, and we'll also send any questions and answers that we didn't get to. And as I mentioned before, we're going to have some poll questions throughout this session. And if you're looking for CPE credit, you'll need to answer those. And if you're on this session and you don't need CPE credit, still feel welcome to participate in those. We'd love to have your answers to those as well. Our agenda items for today, we're going to be discussing compliance changes, both on the federal and state level. There's a lot of stuff that's new there, a lot is new for this year, and some things that have been in the works for a bit and only are just now becoming official. So we'll go over all of that. We'll talk about correction types and processes. Not much new with that, but we just constantly get questions about it, so we want to make sure that everyone understands how to work those corrections. We're going to go over vendor form delivery options. We're going to talk about a few known facts about e-filing. We're going to tell you what's new in our platform and show you how to use it. And then, as I mentioned, we'll have a question and answer portion at the very end. So we're going to kick off this session with that first poll question, and you should see that on your screen now. And the question is, what is your current method of filing 1099 forms? Are you currently paper filing? Are you e-filing through the FIRE system? That's with the IRS on the IRS website. Are you e-filing through a third party? Or maybe this is your first time taking over 1099 filing and you're not actually sure how you're going to do that this year. Go ahead and answer that question now. You'll see a button below the poll question that says send vote. Make sure that you press that when you've selected your answer. A lot of results coming in. Just waiting for a couple more. Okay, I'm going to go ahead and end that voting and share the results out so we can see where we're at. It's looking like a lot of you are actually paper filing those 1099 forms. Some of you are e-filing through a third party, and of course we hope that that's Tax1099. Then you also have some that are e-filing directly to the IRS through the FIRE system, and just a couple of you who don't know. So we hope that during this session we'll provide some good information, some helpful tips, and help you kind of decide how you want to plan out your process for this year. And with that, I'm going to go ahead and turn it over to Ed. He's going to take us through some compliance change information for federal and state.
Great, thanks Geneva, I appreciate that, and thanks everyone for participating and for answering that poll question. That's a good starting point for us to know if people are paper filing or if they're e-filing, and so we can color the webinar a little bit as we go through the information here, talk about some of the different due dates and such that you may need to know. What we're going to focus on first is federal e-filing and a couple of new things there. A new e-filing requirement for information returns that is still in the proposal stage, but looks like it may get there. It kind of depends on what the IRS wants to do. Some information about the 8809 form, specifically for the Box 7 and the W-2 extensions, and then some information about filing the returns late and what problems you may run into if you're filing some Box 7 returns late. First, we're going to talk about the aggregated return requirement. So about half of you mentioned that you're paper filing. It may be that you're a small business or you are an accountant who works with small business, and so the 250 number is never going to be impactful to you. You're not going to have to worry about that. But if you are filing for a medium-sized business or a larger business, or you're an accountant who has a client who hits up towards that threshold, the situation in the past has been that the IRS required you to electronically file your returns if you had 250 or more information returns, and that was per information return. So you could have had 249 1099 miscellaneous forms and paper filed those, and you could have had 15 1099 dividend forms and paper filed those. You wouldn't have been in any trouble whatsoever because they were separate form types. What the IRS is proposing is that they want to aggregate all of your information returns, and that would include your W-2s as well, into a single number for seeing if you meet that threshold of 250. So if you have 150 1099K forms and 120 1099 miscellaneous forms that you're filing under the same employer taxpayer identification number, then you're going to be crossing over that threshold of 250, and the IRS is going to consider that to be, as an aggregated amount, a requirement to e-file. Now, this is still a rule that's in proposed in proposal. So, you know, as the IRS goes through and they look at changing their rules, they propose them, they kind of put them out there. They put kind of a final draft of the proposal out, and it indicated that this would go into effect for any returns filed after December 31st, 2018, which would mean when you get to January, this would be applicable. They haven't, though, kind of flipped the switch and said, hey, yeah, we're really live on this now. So just kind of keep an eye out for that. If you're part of our email list, we'll be sending out any notification if they do decide to make that a permanent feature. And again, it's really more impactful for the larger filers than for the smaller filers. But I did notice that several of you are filing on paper, and so it's something to be aware of. Something else that you want to know about, and this is impactful to pretty much anyone who files, the Box 7 automatic extension has been phased out. So you can no longer automatically get that 30-day extension on sending your forms to the IRS, whether that's via paper or via electronic filing. They're going to be due on January the 31st. If you remember, back a couple years ago, the Congress passed a law, and the IRS, in enforcing that law, changed the due date for Box 7 NEC, or non-employee income, non-employee compensation, on your 1099 miscellaneous form, as well as the W-2 forms, back to January 31st. Previously, it had been March 31st for e-file and February 28th for paper filing. When they did that, that of course caused some confusion. We spent a full year, that January of 2016, I guess it was, going through, or January 2017, I guess it was, going through and explaining to people why it was different, why it was moved, and it wasn't our fault that it was moved. It was just something that Congress and the IRS decided they needed to do, and it was because of helping to avoid fraudulent tax refund dispersals. So if someone had submitted a tax return in February with your name and social security number on it, and collected a refund on that, then when you went to file in March or maybe April, or even if you filed an extension, you filed later than that, when you went to file your extension and asked for a refund, the IRS would say, I don't know what you're talking about. We've already refunded you. You can't get refunded twice. And it was definitely causing a lot of concern with regards to the security of people's information. So the IRS and Congress backed that date up to January 31st, and have kind of been progressively getting a little bit stronger on their enforcement of that. So this year, what they're doing is they're removing the automatic extension for 30 days for Box 7 in the miscellaneous form, and and any boxes on the W-2 form. They do have an allowance for safe harbors, what they call safe harbors. If you have a situation that applies to that, you may fall into that safe harbor, and we'll talk about those in just a moment. But I just want to be clear, on the 1099 miscellaneous form itself, you can still file for an automatic extension for, say, Box 1. If you're an accountant, you have a property management client, and they send lots of 1099s to homeowners who they're responsible for renting the properties out for, and they're all Box 1s, then that can definitely still get an automatic extension of 30 days, and it's not even due until March 31st. So the Box 7 and the W-2 are the big distinctions here. Those safe harbors that I mentioned, if you look at the form 8809, that's the extension form. The first safe harbor is if you are in a federally declared disaster area. So you could think of a lot of recent examples there: the California wildfires, East Coast hurricanes. I'm sure there are more, but there are any federally declared disaster area. You may be eligible to apply for the 30-day extension. You do have to fill this out on paper for that 30-day extension for Box 7 or W-2s. You have to sign it, you have to mail it in, you have to make sure the IRS is going to grant it. It's not automatic, so they may say no, you can't have that extension. So you want to make sure that you get that into them right after January 1st as much as you can, if you know this is going to apply to you. The second safe harbor is fire, casualty, or natural disaster. So exclusive of those federally declared disaster areas, there are sometimes problems that businesses have, right? A restaurant burns down, all their records burn with it, and they don't have any way to really get together their information to file their 1099s or their W-2s in a timely fashion. So that falls into that safe harbor. The third one is death, serious illness, or unavoidable absence of the filer. So if the person at the company is unavailable to make the filing through one of those reasons, then that may also qualify for that 30-day extension. Again, it's a manual extension, not the automatic extension. There's two more, and these are a little bit less oftenly occurring. The first is you just started your business, or you have a client who just started their business in the year 2000. You can qualify for that 30-day extension. The IRS knows that new business owners aren't necessarily familiar with compliance rules, which is why they should all hire accountants, right? But they know they're not necessarily familiar with those rules and compliance, and so they can give them a little bit of a break there in getting that extra 30 days. And then the last one is, again, even more obscure. It's the filers who don't receive timely data on third-party payee statements, sick pays, Schedule K-1s. This came up during comments when the IRS opened it up for commentary, as they often do, and was one of the things that someone requested that they add in, and so they did. They add that in as a safe harbor. Any of those five, though, do require a paper filing to be done and to have that information manually approved by the IRS in order to qualify for the 30-day extension. Geneva, I'm going to pause there and have you go ahead and do our second survey question, if you don't mind.
Yeah, thanks, Ed. That's a lot of great information on federal compliance changes. I'm pulling up that second poll question now, and the question is, which box number on the 1099 miscellaneous form is no longer eligible for that automatic 8809 extension? Is it box 1, box 7, box 11, box 15? Let's just check in here and make sure you're sending that vote in. Just a couple more seconds here, and a reminder to our CPE candidates that if you're looking for credit, you need to answer this question and the two remaining after this question. Okay, I'm going to go ahead and end the voting here and share out those results. Looks like most of you have gotten that right. That would be the box 7 for non-employee compensation. That box number is no longer eligible for that automatic 30-day extension, but as Ed was describing, if you fall under one of the safe harbors, you may be able to manually get a 30-day extension. This is just something to be aware of if you've been relying on that automatic extension in years past as a safety net for your box 7 amounts. Just know that you won't really have that safety net there to catch you this year, and be aware of that in your filing. I'm going to turn it back over to Ed now, and he's going to talk some about our state filing compliance changes.
Yep, we'll get to that one in just a minute there, Geneva. One more item here for our box 7 forms, the 1099 miscellaneous forms on the federal side. This has been something that, again, went back into going back to when they changed the due date for the box 7 and the W-2s, particularly for 1099 miscellaneous forms here, because those are the ones you'd file through the FIRE system. It's been kind of a best practice on our side, on the e-filer side, to separate out the box 7 forms from all of the other forms that you may be filing. So if you're filing 10 box 7 1099 miscellaneous forms and you're filing one box 1 1099 miscellaneous form, on our side, we've been taking those and separating them and sending them up to the IRS in separate batches, just because it was easier to maintain from a scheduling date standpoint. In Tax 1099, as you'll see a little bit later, you can schedule out the effective date, or the e-file date, for those 1099 miscellaneous forms, and you can schedule them separately based on the box number and the due date for that box number. So we've kind of been managing this ourselves because we suspected something like this was going to happen. What the IRS has decided now is that if you file a box 7 form late, let's say you filed that on February 15th, you got most of your forms in for January 31st, but for whatever reason, there was one that was missed, and that box 7 form is going to get filed on February the 15th. and you've got some other forms that you were planning on sending in after the January 31st deadline that are Box 1 forms. Let's say you send all those in together on February the 15th. The IRS is going to count all those forms late, even though the Box 1 forms that you might be sending don't have a true deadline date until February 28th if it's paper, or March 31st if it's e-file. So the IRS is just going to kind of make that entire batch be late. So you want to make sure, just kind of the lesson to take from this is, you want to make sure that you're filing, if you're filing late, right, filing past January 31st for your Box 7 forms, you want to make sure you're not sending in any other forms with that same batch. So if you're a paper filer, that means you need to plan ahead a little bit. You want to make sure you've got enough 1096s in order to send those separate paper filings. What we find happening a lot of times is people will maybe go to Staples, they'll buy the box of 25 forms. It has 3 1096s in it. They'll do their filing for January 31st. Then they'll have a correction that they need to do, and they've got to send a 1096 with that. They send that in February. And they find out they've got another correction they've got to do, and that's in March. And they're out of 1096s at that point. It's hard to get them from anywhere after the tax year is over. So if you wind up having to do another corrected form and don't have that paper 1096 copy, it can be difficult to do. So make sure that you are sending these separately if you're doing it yourself, and if you're filing any of your Box 7s after that January 31st deadline. Now to shift over to state filing a little bit. So we've been talking about the federal filing, going through the IRS, going through for W-2s, Social Security Administration. As you know, many states have filing rates themselves. There are, of course, some states that don't have any income tax requirement, so they don't require you to send anything to them. But those that do fall into a couple of different categories. Broadly, there are about 30 states that participate in what's known as the Combined Federal State Filing Program. And so e-filers like us, when we send in the electronic file to the IRS, we just check a box at the top, and that says, send this to the state. And it only applies if that state is participating in the Combined Federal State Filing Program. There's some pretty big states that do that. So California does, Maryland does. There's kind of C to C there. You've got lots of different states that participate in that Combined Federal State Filing Program. The problem with that program, as you may be aware, that the IRS is not the fastest organization in the United States here, and so it can take them anywhere from June to July of that tax year, or of the year following the tax year, to send that information to the states. So the states have the same issue that we talked about earlier that relates to fraudulent refunds being claimed. The state wants to know as soon as possible if they really are supposed to pay a refund out to, say, me with my Social Security number because I submitted my my state filing. They want to know, is Ed really owed a refund or not? If they're not getting the information from the IRS until June or July, you know, they're going to be sending that refund out well before that if I've filed in a timely manner. So the states are frustrated with the inability of the IRS to get the information over to them in a more timely manner. What that's caused is it's caused some states to kind of go it alone on the state filing. Now some states have been doing this for years. Pennsylvania, Oregon, they've been doing it for a while now. Other states are kind of migrating over to it. So Massachusetts recently moved into it. One of the other New England states just did it this year, Maine or Vermont, I can't remember which one. There's too many states for me to keep them all in my head. But that's where you kind of need to be aware of what your particular state is doing. Do they require filing at all, first of all? If they do require filing, can you accomplish that filing? Can you be in compliance with that filing through the Combined Federal State Filing Program through an e-filer? If you're paper filing, you would go ahead and pull that separate state copy out and send it to your state directly. There's no Combined Federal State Filing Program for a paper filer. But if your state does require a separate direct filing, like a Pennsylvania or an Oregon, then you need to be aware of that and need to know how you can get that information to the state as well. Now, we do keep up with all of that in Tax 1099, so we track all of the 50 states, all their laws. We do it ourselves internally through our tax analysts. We also work with some independent groups that helps abreast of that information. So we're kind of tracking this throughout the year, so you don't have to. We on the Tax 1099 software will identify when a requirement needs to be fulfilled, and will kind of automatically populate that for you if it needs to be fulfilled. You can always opt out. So let's say you decide, no, I want to do that filing to the state myself. I don't want to pay tax 1099 to do that. That's perfectly fine. You can always opt out of that state filing if that's something you want to do. And then next, we're going to switch over and talk a little bit about corrections. This is something else that we'll take a look at in the software in a few minutes. Corrections occur when you've already done your filing to the IRS. So let's say you did all your filing just like you were supposed to. You did it in a timely manner. January 31st, everything was out the door to the recipients. It was out the door to the IRS. You're good. You've washed your hands of the whole situation. You've moved on with your life, and you're doing your day-to-day work. But then your vendor, one of your vendors, comes back, and in February or March or April or May or June or July, they can come back anytime and say, hey, this was wrong. This was incorrect information. We know of specific situations where vendors get their 1099s, get their W-2s, they just stuff them in a drawer somewhere because they don't have any intention of filing their 1040 for a few months. They file an extension for their personal taxes or for their business taxes. They get 5 or 6 more months to do that filing, and so they're not even worried about it until August, September, October. So they don't even open those 1099s until a much later time. And they look at it and they say, hey, wait a minute. You said I got paid $15,000 that was 1099 eligible payments. That's not right. $5,000 of that was an expense reimbursement. It was materials purchase because I built your bookcases for you, and $5,000 of that went to material. $10,000 of that was my services. This 1099 should be for $10,000, not $15,000. In that situation, you've got to do a correction. And there's 2 types of corrections. The one I just described is the easy one. It's a type 1 correction where all you've got to do is fill out a new form, check the box at the top, and write in the correct information. I say write in. You may be typing it in. If you're filing it electronically, you're just putting it into the software. But you're putting that information in with the correct dollar figure. It also may be that you need to void a form. But by voiding a form, I mean make it a 0 instead of an actual dollar figure. That may happen if you have the situation where you paid someone who was a C corporation, you sent them a 1099 miscellaneous, they come back and say, hey, I'm a C corporation. I don't need to get a 1099 miscellaneous. Give me a corrected form, and you give them that corrected form. So that's a type 1 correction. It can be a 0 or it can be a different dollar amount. You can be moving the box amount. So you might have filed the right amount, but just put it in the wrong box. So you put a 0 in the original box and put the amount in the correct box. Pretty easy to do. The type 2 is a bit more complicated. It's more like a couple of moving pieces that you have to make right there. The situation here is that you filed with an incorrect vendor name or tax identification number. So if you're a business owner or if you're an accountant who works with business owners, you probably see W-9s. When you see the W-9, if you're using the IRS PDF copy and just printing it off and handing it to someone and they're filling it out with a pen there, I can only speak for myself, but my handwriting is practically illegible. So I wouldn't blame anybody for getting my name or tax identification number wrong if I filled out a handwritten W-9 form. It may be that when you entered it into the accounting software, you just transposed a couple of the digits there. You changed an 8-9 to a 9-8 back there on the end of the tax identification number. So in that situation where the vendor's name or TIN has originally been reported incorrectly, first you've got to void the form that was incorrect. So if I sent a form that had $15,000 for Ed Pratt and Ed's social ended in 9-8, that was my original form filing, and it turns out that Ed's social security number actually ends in 8-9, then I'm going to need to file a void form, a $0 form with that 8-9, with the bad information. And then I'm going to need to create a brand new form and file it with Ed's correct social security number. So just something to be aware of. You may need to do either or both of those types of corrections depending on what situations you find yourself falling into. We do have the opportunity to do both of those inside of Tax 1099. And again, I'll kind of show you that a little bit as we quickly go through the software at the end of this session. Geneva, I think it's time for the 3rd poll question. So I'm going to flip it back over to you here for a moment.
Yeah, let's pull up that question now, and you'll see it on your screen. If you needed to correct a dollar amount on a submitted form, a form that had already been sent to the IRS, what type of correction is that you would need to file just to adjust that dollar amount? it a type 1 or a type 2 correction? Getting a lot of responses in. Thank you to all of you who are participating in those polls. Okay, I'm going to go ahead and close that poll question and share out those results. Looks like most of you got that question correct. That would be the type 1 correction, the more simple of the two that Ed was describing there. There's no voided form and then a whole new form involved in the type 1, and it would just be one corrected form to show that that dollar amount was updated from what you had originally filed. I'm going to stop sharing those results and turn it back over to Ed for some continued information.
All right, thanks, Ethan. Thanks everybody for participating in that question. We've got one more that'll be coming up a little bit later. So next, we're going to turn our attention to vendor form delivery options. About half of you said that you're paper filing your information. So if you're doing that, then you're taking advantage of the traditional side of this. You're taking that copy that belongs to the recipient, or copies that belong to the recipient, putting them in the mail, and sending them on. So you're printing and mailing those out. If you are a fairly large organization, you may contract with a third party to deliver those mailed copies out. We actually offer both of those in Tax1099. So if you're e-filing through Tax1099, you can have a PDF copy. You don't have to have any special paper or anything like that. Then you can print that out and mail it yourself. Or we do offer a mail service ourselves, where you can send that out via mail. More recently, we've seen the move to electronic delivery, either by email or through a secure portal. If you are working at an organization that does kind of an online payroll, you might be familiar with this. Most of the payroll companies offer a portal where when you sign up to get your weekly statement or your bi-monthly statement, or however often you get paid, you also say, yes, I'll take my W-2 online. That way you can just download it from that same portal when the W-2 is ready. That's what this is like. It's getting that on an electronic delivery. A couple things that you want to be aware of about electronic delivery. The first is that you need to get permission from your vendors or from your employees to send their forms electronically. The IRS does require that you get an affirmative opt-in for taking that form on an electronic basis. If your vendor or your employee says, no, I don't want to get it on an electronic basis, then you need to send that to them through the postal service. So it has to go through that postal service. If you're sending the forms through email, then you can send an email out to collect that affirmation. If you're using a portal like I mentioned before, such as the one through Tax1099, then the portal will handle that for you as well, and keep record of those opt-ins or opt-outs. A couple of little known facts about e-filing. Again, about half of you are paper filers, so you may or may not be aware of this. Joint submissions for the forms under a payer. If you're paper filing, when you sue the IRS, they have to go through a fairly tedious process to take that paper, scan it into their system, make sure that everything's lined up, make sure that it was reading correctly, that box 1 is in box 1 and box 2 is in box 2, make sure all that stuff is where it's supposed to be, make sure that it goes into their database in the right spots, and then they have to come back and compare that information in their database to the information that they are receiving from the employees on their 1040s or from the contractors on their business filings. So it takes a good bit of effort on the IRS's part to process those paper filings. That's why they let you e-file as few forms as you want to. We talked earlier about the minimum requirement, the maximum requirement that you can paper file. But on the minimum, you can do just a single form if you want to. Also, when you're e-filing, if you had that situation where you filed a bunch of forms, but you found out that you forgot one, and then later you found out you forgot a couple more, and then later you found out you forgot a couple more, and accountants may be nodding their heads because oftentimes their clients will do that. They'll say, I've got 10 1099s, everything's in my QuickBooks, it's all good to go. And then 2 weeks later, they remember, oh yeah, I forgot, I paid this guy, just wrote him a check, hand wrote him a check, and completely forgot to tell you about it. Didn't enter it in the accounting software. Sorry about that. and so you need to enter that, submit that to the IRS separately because you've already sent the other forms. When you e-file, you don't really have to worry about those separate submissions. The IRS prefers to get the paper filing at one time, but the e-file can be sent separately. Another advantage to e-filing, you don't have to worry about those 1096s. The e-file replaces the 1096, and so there's no 1096 that you need to print out and send out to the IRS because the e-file takes care of that. And then separate state filing, I mentioned before, if you're filing, if you're living in a state that requires a filing, they may require a separate filing if you're paper filing. If you're e-filing, though, you may be in a state that participates in the Combined Federal State Filing Program. And in that case, you don't have to do a separate state filing because your e-file provider may or may not be taking care of it for you. We do take care of it for you, but other e-file providers may not take care of that for you. So next, we're going to switch over and look at the platform real quickly. I'm looking at the time, and so I'm going to be aware of it. I'm going to leave us some time to do some Q&A at the end. But a couple things that are new in Tax 1099. Just a couple things on the slide. There's more than that that's new, but there is a two-way sync available now for QuickBooks Online users, Xero or Bill.com users, and that relates to gathering the recipient information. We have an online W-9 gathering, an electronic W-9 gathering. We can do a 10 match of that information, so when you get the W-9 back, you can compare it and contrast it to what the IRS has by using the 10 match option. Once you find out that that information is good and correct, it's valid with the IRS, you can actually link that from Tax 1099 back over to QuickBooks Online, Xero, or Bill.com, and you can even send over the PDF copy of the W-9 that comes back with that process. So it's a pretty handy tool. Blocking submission for a single form. In the past, in Tax 1099, we've allowed clients to block a group of forms together. So let's say you submitted 10 forms together. We would allow you to block all of those 10 if you needed to. But just based on feedback in the last year, some clients need to block just one. It could be a situation where the filing has been scheduled. It's scheduled for January 31st, but I filed it on January 15th. Submitted on January 15th, still waiting out there to be filed, so it hasn't gone to the IRS yet. And I found out one of my vendors is C Corporation, and I don't need to send them that notification. This year, you'll be able to go in and just remove that one form from the other 10, and so you'll only be e-filing 9 of those forms. So we built that little additional feature in there. And then for our enterprise users, I'll talk a little bit about enterprise in just a moment, but for our enterprise users, we've added in a notice management feature, more for accountants and tax professionals than anyone else, but gives you some capability to go in and manage notices that your clients may receive, whether those are B notices that are arriving out of having bad taxpayer identification number and name combinations, or if there are other types of penalty notices that your client may receive. So that notice feature is available for enterprise clients at an additional cost. Speaking of enterprise, if you are at an accounting firm, if you work with a group of other staff members at your accounting firm, or if you work at a large accounts payable organization and you have multiple staff members who are participating in the information return filing process, you could set up workflow, you can set up user management, you can have separate logins and passwords, you can have audit trails available, and you get some 10 matches included in the enterprise package. So it is just an option that's available for those who may need it for those larger accounting firms or, again, organizations that have multiple people involved in the process. So with that, let's take a look around Tax 1099. I'm going to share my screen. It'll take just a minute for it to render over there on your side, but give me just a moment while that screen sharing application loads in. All right, so we are going to look at Tax 1099 here. I am logged in, and I am logged in as an enterprise user, so that kind of upgraded set that I mentioned a moment ago. I'm logged in as the enterprise user. Down here at the bottom, I can tell that because I have these additional submission statuses, that's the word I'm looking for, that pertain only to our enterprise users. Enterprise users may submit things for review. We may have things that have been reviewed and approved, things that have been reviewed and rejected, and things that have been resubmitted for review. And so we just kind of color code all of the submissions here so you know what status they're in. For those of you who are using the essential side, you'll see these. So I've got a bunch that are not submitted. I've created these forms, but I haven't gone through the process to actually submit those forms. So you'll see all of those listed out here. If they are submitted, if they're approved by the IRS, if they're blocked, resubmitted, all those are in there and available. On the dashboard, if you are an accountant, you're working with multiple clients, most likely you may want to limit what you're seeing to just one of your clients. And so you can just simply search by the name or the tax identification number, or you could search by the client ID that is applied to that client. A lot of accountants use a client ID for their billing and making sure that they're billing back to the right client. You can go back, you can look at multiple years, and you can look at the different statuses. You can even search for a specific reference number or start a new filing from here on the dashboard. So just kind of a simple faceplate for you to work with. Me, because I use this all the time, I tend to drill into the menus over here on the left and use tools from the menus there. I'm actually going to start in our people menu. I'm going to look at the manage recipients. So you would create a payer, and then you create a recipient as you're creating a form. You can create both of those as you're going through that form creation process, or you can import the information. We have a variety of imports that are available, whether that's Excel or one of our partners that we work with, like QuickBooks, like Xero, like Bill.com. Sorry, I just clicked in the wrong place. I was talking too fast for my hands to keep up. So I was saying, I'm going to click on the manage recipient. You can create that either through creating it manually if you just have a few forms to do, or if you create it through an import. Either process will gather the information and bring it in here to Tax1099. Here, I'm logged in as an enterprise user. I'm typically showing this off to accountants, and so I have, like an accountant would, I have quite a few payers in my section. I'm just going to pick the one called Class Act here because it has a little bit more pertinent information in here. So you can see the recipient's name, their address. I've 10 matched to this one. It's rejected, obviously, because this is fake information. But you might see green there and an accepted status and the date that it was gone through the 10 match. This is where you request a W-9. You can see if the W-9 has been completed and come back to you. If that W-9 has been completed, I've done the 10 match, I've got the green, that's where you may want to select this one and say, you know what, I want to send this back over to QuickBooks Online or Bill.com or Xero. So you can do that with the software, and it syncs that information back over. If they've made any changes here, let's say you originally created this vendor in QuickBooks, and they changed their name or they changed their address, we'll recognize the same taxpayer identification number and we'll update the information in QuickBooks or Bill.com or Xero. And we'll update that information and attach in the W-9 PDF that is attached here in Tax1099 as well. Also, if this vendor didn't exist, let's say you started from Tax1099, you sent out the W-9, we'll create that vendor over there in the other system. Another nice thing that has been added this year, again, mostly for accountant users, this little button that says export all payers to Excel. What I get here is the opportunity to download all of my payer and recipient information into a specific form type. So I chose 1099 miscellaneous, but you saw the list of the other forms that are available there. We'll see how long it takes my Excel to open here. The other day when I did this session, it took about 90 seconds, but it looks like it's going to work a little bit faster today. But what you get here is the Tax1099 import template, and you get all of your information pre-populated for your existing payers and recipients. So again, for accountants, or maybe even an accounts payable organization that has multiple entities that you work with, this may be a fast way to start your process. You've got your payer information over here, you've got your recipient information over here. As I scroll over to the right, all I need to do is come in and fill in my box information. So if I'm doing box, and I've got that in an Excel report, I can do a VLOOKUP with that recipient's tax identification number and populate that data right there. You've also got the boxes here for doing your state filing. If you don't fill those out, that's potentially okay, because you may be in California where it's a combined federal state filing state, and so you don't have to worry about that. If you have someone in Pennsylvania, though, if you don't fill out those state boxes down here, that's where our new state filing features are going to be helpful to you, because we'll recognize that that recipient lives in the state of Pennsylvania and will automatically populate some of that filing information for you. One other thing that's available here underneath each of the payers, if I just want to look for one person, you may have hundreds of vendors in a particular company. You may have dozens. We have some clients who have thousands of vendors. You can just type in a portion of their name, and so you can find that anyone who matches that person's name, and then I could go in and edit that vendor if I needed to. So those are the recipients there. I'm going to flip over real quickly to our Manage Forms page. So once I've completed filing my forms, I've submitted them. They may be waiting to go to the IRS because we do allow you to schedule those forms out based on the actual due date of those forms. So they may be sitting over and waiting to go out. But once I've gone through the submission process, I've paid for them through Tax1099, then they go live here, and I can pull them up. I can pull my any of my payers. I could pull a prior tax year if I wanted to look at that. So if I look at 2015, I've got lots of forms out here from my 2015 tax year. 2018, I've got a few forms that I have done here in this test account for the same vendor. So you can see here I submitted these a couple days ago. You can see they're scheduled for different dates. These first two are box 7. The last ones are box 1. You can see that I've got a state filing originating for this one vendor who lives in the state of Pennsylvania. If I selected to have Tax1099 send these via postal mail or send them via email, you've got boxes here where you would see a checkbox for that as well. If you don't see anything there, then that means you're probably intending to download all these as PDFs and mail them yourself. So you certainly have the opportunity to do that here inside of Tax1099. You can also, as I mentioned, block the submission here. So if I'm got this form, it's scheduled out for a future date, and I realize, oh, this business here, they're a C corporation, that's where I can go in and block that single form out and not have that information sent to the IRS for that recipient. Got the same search box here, and you'll notice that you may have noticed this on the previous screen too, that we're masking the tax identification number, just generally a security feature in the user interface here, so that if anybody's looking over your shoulder, they're not always visible. But you can certainly turn that on so you can see what the tax identification numbers are. And again, in my case, they're all tests, so you're not getting any information there that's helpful to you either. But the other thing you can do here is if, let's say that I had a guy here, Joe Smith, I've got the Pennsylvania filing. Let's say that when I went through my original filing, I opted out and I said, no, you know what, I don't think I'm required to file to the state of Pennsylvania. I'm not going to do that. Well, later I find out, oh yeah, I actually was required to file one to the state of Pennsylvania. My bad. I can come in here, and if you've done that federal filing already, you can continue on with the state filing as a separate piece. That is also new this year. Prior to this year, you had to do all the filing at one time, and so we separated out so you'd be able to process that at a later time if you need to. Speaking of the state filing, I've been here under the Manage Federal Forms page or tab on this page. I've also got a Manage State Forms. So if I do have direct to state filings, I can look those up here, and I'll look that up for Class Act, and I'll see that's filing for dismissal going to the state of Pennsylvania. What you won't see here are filings to combined federal state filing states, because there is not a separate filing that goes to the state. Remember, those are sent by the IRS to the state at a later time in the year. And so you won't see those here under this Manage State Forms page. If you're doing any reconciliation forms, we offer those as well for states that require reconciliation. And so you can file those through, or you can see those here under the reconciliation forms after you've done that filing piece. I'm going to quickly show you the form creation process. I know we've only got about 10 minutes left in the time here, but through the form creation process, I'm going to click there, going to click New Form, and you'll see we've got multiple years that you can file for here. So we know we actually offer this mostly because people will come to us and say, you know what, I didn't even know I had to file that. You know, I just started my business last year, didn't even know I had to file. Can I file for last year? Or our accountants will come in and they'll say, I've got a new client who has been out of compliance for the last couple of years. Do you have a way for me to file? And yes, you can go back and you can file some of those older forms. For 2018, you can see the list of forms that are available here. I'm going to click on 1099 miscellaneous, but you could enter a single form for any of these just by going through this process. What I'm going to show is creating a corrected form. And you can create a corrected form whether you filed the original form with Tax1099 or not. So if you did a paper filing and you come into April, May, that you don't have another 1096 that's available and you just need to follow a correction, you can certainly do that here. You just add in your payer information. There's a box that comes up that lets you fill out that payer information. I've already got a payer that's created. I've actually got multiple payers that are created. I don't seem to be able to click on the right spot here. There we go. I've got multiple payers that are created, so I'm going to pick that same payer that we've been looking at. Recipients, same thing. I can add a recipient in if I need to, just filling the boxes.
Hi, everyone. I'm chats that the sound has gone out. Sorry about that if you're not able to hear right now. Can you hear me? Can you hear me talking when I'm talking? Can you hear me? Ed was just
I
about
can.
wrapping.
Yes, this is Nikki. I can.
Oh, good.
All right,
Okay. Hi, Nikki.
great.
Yeah.
Sounds like they can hear
Um.
Geneva, but can't hear me.
I can
Oh,
hear you
I can
now.
hear Ed now
Oh,
too. Can everyone else
awesome.
hear Ed also?
Okay.
Okay.
Yeah. Well, it's live presentation. Sometimes things go well, sometimes they don't. So Geneva, I think that was pretty much all I wanted to share. So I'm going to pass it back over to you to go through any questions that might have come up.
Sure, yeah. So we have one last poll question to cover. And after you've answered this question, feel free to chat in with any other that you have. And we'll answer those in the time that we have left, and we'll also follow up with those by email after this session. But the last question you see on your screen, which of the following is not required when e-delivering your forms to vendors? This is a question that we covered a little bit before Ed was showing you inside of our system. And your options here are opt-in from the vendors, a printer, a secure method for e-delivery, which is not required. Just a couple more responses that we're waiting on. I have had a question a lot in the chat box about how you'll be able to review this webinar. We will be sending out a recording of the session and then also a PDF of the slides. So you'll have that information that you can view after this webinar is over. That will likely go out tomorrow morning, and you might want to check your spam box to make sure that you're not missing that if it doesn't come to your inbox. I'm going to go ahead and end the voting here and share out the results. And most of you have gotten that question correct. You wouldn't need a printer if you're going to e-deliver those forms. You would need opt-in from the vendors. That's IRS policy. And you'd also need a secure method for e-delivery. I'm going to open it up to everyone on this webinar for any questions that you have about compliance content, about our platform. Any questions that you have, feel free to chat those in. Another question I'm seeing is if we have any more sessions. We will have a session tomorrow, actually, at the same time, and I can send out information to anyone that wants that about into that session if you would like to view that one. But we will be sending out the recording and also the PDF for this session as well. One question, Ed, that we get pretty often is what types of things, little bits of information that have changed qualify for filing a correction? For example, if a phone number changed or if an address changed, would you need to file a corrected form for that?
Yeah, and I'm just going to talk. If you can't hear me, please just chat in and let me know. Then I'll stop talking. But if you have an address or a phone number that the vendor has changed, you don't need to file a corrected form for that. You may want to print the copy of the form that you've already filed and put it in an enclosed envelope and put the new address on it so that they make sure they get it. And of course, update your record so that next year you get it to go to the right to the right address. But the IRS is not really concerned about that address being incorrect so much as the amount and the vendor name and the tax identification number. Those are the things that the IRS really cares about.
Okay, yeah, thanks, Ed. Any other questions? in just a couple minutes that we have left in this session, here's another one that we get pretty often. How are state filing requirements determined? Is that based on the state of the payer, the state of the recipient? How does that usually go?
Yeah, it depends on the state. So some states are really just looking for the recipient address. If they're resident in the state, then they want to get the income information. Oregon is an example of a state that if your company is headquartered in Oregon, or if you're paying people who live in Oregon, they want a 1099 for either of those situations. So again, it's just the fact that we live in the United States, and there's 50 different states, and each state kind of does its own thing that makes it that way. You have to keep up with those state filing compliance requirements separately. If you happen to live somewhere like Florida or Texas that doesn't have a state income tax requirement, and all of your employees or all of your contractors and clients are in the state of Florida, that's pretty nice. So you don't have to worry about it. But for people who have businesses that are multi-state, or if you're an accountant, you have clients who are multi-state, that's where it gets to be a bit more complicated.
Okay, thanks so much for that answer. And thank you to Nikki and to the Latino Tax Professional Association for this joint session. We've really enjoyed being able to share some of this information with you, and we're really happy that we could do this together.
Thank you. I enjoyed it as well. I learned a lot.
Great, yeah, good to hear. We've got just a minute left, so if you have any other questions, you can type those in now. You can respond to our follow-up email with those, and we'll get back to you the answers on those. But for now, we're going to go ahead and sign off of the event. Thanks again for joining us, and we hope that you all have a really great evening.
Thank you.